En los próximos minutos vamos a hablar de la renta fija y como cada miércoles nos trae esta información nuestros analistas de Bernstein. Hello, Arnaud Mounier es jefe de desarrollo de negocios de renta fija en Bernstein. Hello.
Hello, thank you for having me.
Good afternoon. To begin, let's do a quick recap of this 2024 for fixed income. What worked well and what was disappointing in this year for fixed income investors, please?
Sure. So what worked well, I would say very simply, credit. Corporate bonds, whether it's investment grade, high yield bond, they had a very strong performance in 2024. I think investment grade bond was quite a consensual call by investors. A lot of the CIOs were recommending buying investment grade bonds, and that did not really disappoint from a credit spread perspective. High yield bonds were more of a surprise. I think a lot of investors were a bit concerned about economy slowing down in the US, economy slowing down in Europe. And so they did not have a strong conviction on high yield, but the performance was actually pretty strong. Very good performance from a number of high yield issuers who were very conservatively positioned in terms of balance sheet management. And so they did not really suffer from any slower economy, especially in Europe. The US economy was actually stronger than expected. So that led to this good performance. Now, if you're asking what disappointed in 24, I would say overall people were expecting the yields in the US and in Europe, the 10-year yield of bonds, to be lower by this time of the year. Actually, you can see in the US that the 10-year yield is 50 basis points higher than the level at which it was at the beginning of the year, and it's a bit the same in Europe. Spain is probably the only exception where the yield of the 10-year bonds is lower than the level at the beginning of the year. And the main reason for this higher yield has been basically, as I said, stronger than expected growth in the US, but also this idea after the election of Donald Trump in the US that actually inflation could come back. And so the 10-year yield also were higher than what people expected. And that has led to maybe a performance for interest rates not as strong as what investors were expecting for.
And Arnaud, going into next year, into this 2025, what are the key themes that your company focuses on as far as fixed income is concerned?
Right. So I would say the first theme is around the role of fixed income in your asset allocation. As I said, a number of investors may have been a bit disappointed with the returns for fixed income, especially in Europe. We have seen good demand from investors in the US, in Asia, but I think if we look at European investors, retail investors, they have not been putting a lot of money into fixed income. We think at the current level of interest rate and the fact that in Europe, interest rates should go lower as the ECB is going to cut interest rate, fixed income should still have a decent performance. We think also it's important to have a fixed income allocation as you think about your portfolio as an investor, as a real defensive asset. And again, with interest rate at the level at which they are at the moment, if things were to turn negative in terms of the overall economy or the geopolitics, then fixed income should protect your portfolio pretty well. So that's the first theme. The second theme, I would say, is whether we are going to see more divergence between the US, where very, I would say, positive vibes from the US elections on the economy are coming to the market. And so people are thinking maybe the US economy will be strong enough that the Fed does not need to cut rates too quickly, versus Europe, where the economy is expected to suffer with some of the tariff discussions, for instance, with the US. And so the ECB could cut rates faster. And so this divergence between weaker economies like Europe, like China versus US, and so how do you allocate in this diverging world is the second theme we are focusing on as well.
And what part of the fixed income markets do you favor at the moment?
Well, the first thing, if we think about interest rates, is we like to put what we call steepening trades in our portfolio. We think that basically the short end of the curve will rally faster than the long end of the curve. So basically, we want to put these steepening trades on, whether it's in the US and in Europe, ready to bet on the fact that central banks will keep cutting interest rates in developed markets, but that the long end of the curve, because of the supply of new bonds to refinance those deficits that they have, we will have to stay fairly high in terms of interest rate level. So steepening trades in developed market. Overall, we remain quite positive on credit, despite the fact that credit spreads are getting fairly expensive. We still like BBB rated bonds. We still like the higher quality of the high yield market. We don't go too aggressive in terms of credit quality. We don't want to go bottom fishing, buying CCC rated names. You really want to stay in the safer side of the market. But overall, we like credit. And I would say we have also, a focus on hard currency emerging markets. We think corporate bonds in emerging markets are also quite attractive and could present some value for investors.
And to finish, many investors are now are commenting that credit spreads are tight and expensive. How does AllianceBernstein think about that?
Yeah, I think that's right. The interest, if you look at the credit spread by historical standard, whether it's investment grade credit spreads or high yield credit spreads, they look expensive, they look tight. And so the idea is, as you go into an economy which is, again, slowing down in many places, we could see much more divergence between sectors, between issuers. And so even though credit spreads are tight, we think it's very important to be an active manager and to select bonds, to select sectors that are going to outperform the other sectors. And so for us, using our technology, using an approach which is based on quality factors for selecting bonds is a good way for us to add what we call alpha, and basically not just to rely on the spread level to generate your return, but to rely as well on active selection to add more alpha and get your return level a bit more attractive than just looking at the spread level.
Arnaud Mounier, thank you very much for being with us today. Es jefe de desarrollo de negocios de renta fija en AllianceBernstein. Thank you very much.
Thank you
Good afternoon.
very much.